This is Paul Donovan from UBS's Global Economics Department. Mr. Bernanke and Mr. Paulson are hauled before the intellectual powerhouse that is the House Financial Services Committee today to testify on the TARP, or the People's Democratic Nationalization Program, as it may more properly be known, seeing as toxic assets have nothing to do with it anymore. There will, of course, be a series of questions about the use of the funds, and there may well be questioning about bailing out American car companies using the TARP. Economically, there is a difference between bailing out financial institutions that provide the nerve system for modern capitalism and bailing out companies that make products the public doesn't want to buy. Politically, the distinction does not seem to be quite so well appreciated. On the subject of car companies, the Japanese media are suggesting that Ford will sell a large chunk of its stake in Mazda to Japanese buyers in order to raise some cash. If true, could be a source of support for the dollar against the yen, assuming the purchasers need to change their funds into dollar cash. Japan's Minister of Finance, Nakagawa, has declared that the dollar should remain the world's reserve currency. There is some irony in Japan defending the dollar's reserve position when the Japanese private sector has been one of the leading forces behind the move away from the dollar as an international invoicing currency of choice. We expect the dollar to remain first among equals as a reserve currency, but to continue to lose market share in international transactions of the private sector. For the central banks, it probably retains its dominant position, but this is less relevant when considering the relative volumes of the private sector and the public sector reserve status. We have a range of ECB speakers hitting the wires today. None are expected to change the recent dovish tone with regard to policy, though it seems too much to hope for that there will be any acceleration in easing from the rather stodgy ECB approach to date. The main data releases are inflation and therefore something of an irrelevance, as forward-looking concerns are focused on disinflation and potential deflation. US producer prices are seen at minus 1.6 on the headline, plus 0.1 excluding food and energy. From the UK, retail price inflation and consumer price inflation are both due. Both will slow. We see 5% headline CPI, 4.6% headline RPI. Inflation takes time to respond to the economic circumstances, of course, so falling food price inflation should help with today's numbers. For us, the bigger story is the prospect of negative RPI and very weak CPI in the earlier part of 2009. Beasley of the Bank of England will be speaking today as well. That's all for today.
Goodbye.